Ladies and gentlemen, Kicking here, welcome to the daily update. Hope you guys had a good day trading. Today, market is up pretty much flat there. On the S&P Nasdaq did the same, semiconductor 0.4, Dow negative, along with the Russell 2000. Trends were flat. Banks, energy, biotech, healthcare, home builders, utilities, retail, emerging market, every sectors are slightly green, with some sectors being red. Gold, big one up. Gold, silver miners are also dollar down, oil down, treasury bond up. The rates are down. VIX is down a little bit. Let's stick with S&P 500 ETF. Spider! 65-minute chart. Here, so this is what we closed yesterday. It looks like we actually saw a gap up this morning here. Looks like we could not advance after the gap, but we quickly got faded. And I came down to a micro-term support area here. As you can see, this is the prior resistance level. Pretty much acting as a new support here. And then we bounced a little bit and pretty much sideways last 3 hours. Pretty much this market didn't do anything throughout the day today. And the sentiment still remaining same as yesterday. And so, I mean, looks like that 412, 413 is still the micro-term support area. I have my micro-term moving average currently residing at 412.25. And some of these levels, they're going to decline. 413, 412.25, 410. And obviously, my short-term moving average is also guarding that 410 vicinity. So some of those levels going to be the support. Obviously, the resistance, which we've been talking about this entire week and last week, pretty much 417 is the February peak. And then the Boss Bears Command Center at 420. Let's check out that oscillator. And so the oscillator has crossed up here, as you can see. A little hiccup here, a little whipsawing action, but it managed to kind of cross back up, as you can see here. So the oscillator is favoring the buyers going to tomorrow. If I just extend this right here, some might argue that we might have a triple bearish divergence with the triple peaks here with the lower highs on the oscillator. And that might be true if the bears can, making sure that this oscillator does not break out above this bearish divergence resistance. With the triple divergence, if that plays out, there's a good chance bears can probably at least push this thing down to retest at minimum 410 and 409 gap area, right? And then I'll extend this, that rising pivot that's also guarding that 409 or so. Again, that's that rising pivot is, you can see here and here and here. And that's the level coinciding with the up gap area. And just above it, we see the micro-term and the short-term moving averages. So some of those levels bears need to conquer before they can get to that level. So if we do see the kind of triple peaks, bearish divergence, right? Triple peaks. If that's the case, then I could see this thing retesting this rising pivot there. However, if that doesn't pan out and bulls really thrust this higher and the oscillator gets above the rising or the falling divergence resistance, I could see bulls reaching about 417 or so. I'm gonna come back for you. We'll reassess the situation. Enjoy your evening glove trading tomorrow.